Hey there. So you're wondering what's happening with the housing and mortgage market. Here is the latest, just like I'd tell a friend. Right now, we're seeing a bit of a mixed bag with mortgage rates. The common 30-year fixed rate loan nudged up just a tiny bit, landing around 6.24%. The good news is that it's still very close to the lowest we've seen this year. If you're looking at a shorter term loan, the 15-year fixed rate actually dipped a little down to about 5.49%. We've been seeing these 30-year rates stay above that 6% mark for a while now, and that's definitely been a big factor in slowing down the housing market. Everyone's also watching the Federal Reserve to see if they'll cut their main interest rate again in December, which would help mortgage rates. Honestly, it's looking pretty unclear. Some officials at the Feds are tapping the brakes, saying they are still worried inflation is too high and that the economy is holding up pretty well. To make things even trickier, a recent government shutdown means they're missing some of the key economic reports they use to make these big decisions. So we're all just, wait and see mode on that front. Because those fixed rates are higher, we're seeing more buyers get creative. There's been a real uptick in people choosing adjustable rate mortgages, often called ARMs. About 1 in 10 mortgage applications recently was for an ARM, which is the most we've seen in a couple of years. The idea is to get a lower introductory rate. For example, an ARM that's fixed for the first 5 years was recently at 5.66%, when the 30-year fixed was at 6.3%. It's important to know these aren't the risky loans from back in 2008. Today's ARMs have much safer rules and longer fixed periods to start. Here's another big change that could help some buyers. Fannie Mae just announced they're getting rid of their 620 minimum credit score rule. Fannie Mae is one of the huge companies that backs a lot of mortgage out there, so this is a big deal. Doesn't mean your credit score doesn't matter anymore, but it gives lenders more flexibility. Instead of a strict cut-off number, their automated system will now do a more complete review of your all financial picture to see if you qualify. So move away from just one number. This could even help people with no credit history, as the system will now flag lenders to check for things like a history of paying rent on time. With affordability being such a big challenge for so many people, there is also talk of other new ideas. The government is apparently exploring a 50-year mortgage. This is just in the discussion phase, but the goal would be to lower those monthly payments and help more people get into a home. It's another sign that people in charge are recognizing how tough it is out there, especially with home prices staying high. Now I wanted to share some good news, especially if you've been worried about all the talk of the government shutdown affecting the housing market. The shutdown has ended and they've made a deal to get things funded again, which is a big relief for a lot of people trying to buy a home. What this basically means is that those key federal housing programs that were stuck in limbo are starting back up. I'm talking about popular loan programs like FHA, VA, and USDA loans. A lot of buyers, especially first-time buyers, rely on these, so having them frozen was causing a lot of stress and stalling deals. Another really important piece of this, especially for us here in Florida, is that the National Flood Insurance Program, NFIP, is back in business too. As you know, you can't get a mortgage in many areas without flood insurance, so having that program paused is a major roadblock for closings. Now, just so you know, while it's great that everything is on again, it's not like flipping a light switch. Everyone who was furloughed is just getting back to their desks. And there's a pretty big backlog of work to get through. They're saying it could be about a 6-week backlog, so we should still expect some delays in the closing process for a little while. It's definitely a hurry up and wait situation, but at least things are moving forward. It's also interesting to know that real estate groups were really pushing legislators hard on this. They were sharing stories from buyers and sellers who were stuck, explaining how much this was hurting local economies every day it dragged on. It's good to know they were fighting to get this sorted out. So the main takeaway is that things are back on track, but a little patience is still going to be key over the next month or two as they clear out that backlog. Now, can you imagine what so many people are going through right now? It's all about how the goal of buying a home has become so central that many people are actually rearranging their lives to make it happen. A new survey found that a huge majority of people who want to buy a home, about 71%, are actively delaying at least one other major life milestone. Think about that. It's not just a small financial tweak, it's changing the whole map of when people do things. So, what kind of milestones are we talking about? Well, the big ones. The report says people are putting off getting married and even putting off having children until they can afford to buy a house. Others are delaying a career change, deciding to stay in a job they might not love because it's stable. It's fascinating because for a long time, buying a house was something that came after many of these steps. Now it seems like many people see homeownership as the starting line for adulthood. This trend is even stronger with the youngest generation of buyers. For example, for Gen Z, something like 84% are postponing a major life decision to focus on saving for a home. The report mentioned that more than half of all aspiring first-time buyers don't expect to buy their first place until they're 40 or older. That's a massive shift from a generation ago when the typical first-time buyer was often in their late 20s or early 30s. Even though it's clearly a tough journey, the really interesting part is that the desire to own a home is as strong as ever. Most people, around 85%, still see it as a core part of the American dream. They view it as a much smarter long-term financial move than renting and a better way to build wealth than even the stock market. The value of having a place of your own just means that much to people because the desire is so strong, but the challenges are so real. People are getting very creative to make it work. They are finding new ways to get to the closing table. Many people are willing to take on a side job just to boost their savings. Others are becoming more flexible, looking at smaller homes, fixer-uppers, or moving to a more affordable area. We're also seeing more people team up, with many considering co-buying with family members or even a non-romantic partner to combine their purchasing power. It just shows that while the path has changed, the destination is still the same. Now, have you heard about this new trend people are calling revenge saving? It's a fascinating idea, and it's something I'm seeing have a real impact on how people are planning for their big goals, like buying a home. So, what is it? Well, think about the last couple of years. After all the lockdowns, a lot of people went into what they called revenge spending. We all wanted to finally take those trips, go out to nice dinners, and just live a little. It felt good, but for a lot of folks, it also meant their bank accounts took a hit. Revenge saving is basically the pendulum swinging all the way back. It's when people decide to get super focused, almost aggressive about saving money, often to make up for that period of spending. It's not just about spending less on coffee, it's a total shift in mindset. I read about one real estate agent who realized she was spending a ton of food on food delivery and subscriptions she never used. She decided to get serious and is now saving almost half her income. She even said she treats it like a competition with her past self. It's really about taking back control of your finances, especially when everything in the economy feels so uncertain. That feeling of control is a powerful motivator. What's really interesting to me as someone in the real estate world is that financial experts are saying this kind of intense focused saving is something they usually only see in one other situation: people who are laser focused on saving for a down payment on a house. You know, the type, they become Spartan savers, cutting out almost every extra cost. This new trend shows that same level of dedication, but it's bubbling up for all sorts of reasons. Of course, it's all about balance. Being smart with your money is always a good thing, but experts do warn about going too extreme and burning yourself out. You don't want to lurch from all out spending to all out saving either. The best approach is usually somewhere in the middle, but it's still a really interesting trend. And for anyone who's serious about saving for a big goal, whether it's paying off debt or saving for that dream house, this revenge saving mindset just shows what's possible when you get really clear on what you want. I just saw some really interesting news about the housing market that I thought you might find fascinating, especially if you've ever wondered about selling a home on your own. You've probably seen those for sale by owner signs, or FSBOs, as we call them in the business. Well, turns out that fewer and fewer people are going that route. In fact, the number of people selling their own homes has just hit an all-time low. It used to be a lot more common. If you go back to the 1980s, about 1 in 5 sales were done directly by the owner. But now, that number has dropped to just 5% of all home sales. On the flip side, the number of sellers who choose to work with a real estate agent is at a record high at 91%. That's a huge shift. And it really shows that even with all the technology and information we have online, selling a house is a lot more complicated than it looks. One of the biggest reasons people try to sell on their own is, understandably, to save money on commissions. But what's really telling is that when you look at the data, it's not always the big money saver people hope for. A recent report found that the typical home sold by an agent went for $425,000, while the typical FSBO home sold for $360,000. That's a pretty significant gap. Even if you account for commissions, the agent-assisted sale often nets the seller more money. I think a lot of it comes down to the sheer amount of work and expertise involved. When you're with the seller, you're not just putting a sign in the yard. You have to figure out the right price, which is tough even for us. You have to get the home ready, market it so the serious buyers actually see it, handle all the showings, and then navigate the mountain of contracts, legal disclosures, and negotiations. A separate survey found that almost half of FSBO sellers admitted to making legal mistakes, and a lot of them said that the process was so stressful it brought them to tears. So while the idea of saving on commission is tempting, it seems more and more homeowners are deciding that the challenges aren't worth it, just aren't worth it. They'd rather have someone in their corner to manage the marketing, price the home competitively, and handle the complex paperwork to get them to the closing table. It really confirms that in a market this complex, having a professional guide you through the process is more valuable than ever. And that's the real estate update for this week. If you found this video helpful, please give it a like. It really helps the channel grow. I'm Albert Stepniak, a realtor with Coldwell Banker here in beautiful South Florida. So don't forget to subscribe and hit that notification bell so you never miss a weekly update. Thanks for watching, and I'll see you in the next video.